The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 406, NASDAQ off 117, S&P's off 42, gold contract down $2, trading $17.79 an ounce. Silver down 33 cents, $17.72 an ounce. Light sweet crude up flat, down 74 cents, $39.64 a barrel. Notes and bonds. We get the 10-year right now down 2 ticks, trading out at 138.22. The 30-year up 8 at 177.06. And King Dollar up 419 ticks, saving itself once again, folks. King Dollar actually tested the highs of the last low of June 10th and rejected it again. So we'll see where this baby's going to go. 97.06. The euro is at 112. The yen is at 106.93, and the British pound is at 124 to 1 U.S. dollar. Tom O'Brien, it looks like that S&P wants to visit its friends from Monday night, man.
What happened, man? The NASDAQ is in red. I thought NASDAQ and tech stocks only went up. Stocks only go up, I hear.
It's pretty amazing. There's no doubt about that one. We were talking with Jason yesterday. It actually blew my mind that those 5 stocks were 21% of the S&P 500. That, granted, I understand, the NASDAQ 100, but not 5 stocks being 21% of the S&P 500. That's insane.
Those market caps are just, they just keep going higher, man.
Monster, no doubt. Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade Think or Swim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market, option strategies, futures, defined risk. Great program. You haven't test driven yet the Think or Swim platform. Very easy to do. You're sitting right on our site. Just hit the banner, bring it up. They allow you to trade with paper money each and every day. And you can follow Kevin and his team. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. I think this market looks tired.
Yes.
It looks like it's a little fatigued today. I'll tell you what's really catching my eye. A couple things. Obviously when we get to Tuesday night and Wednesday morning, we're looking at crude inventories. And this $40 level in crude looks pretty ominous with everything that we have coming down the pipeline in crude. So I looked at the API number last night, and yeah. I think it's interesting. March 13th, the U.S. was drilling 13.1 million barrels per day in crude oil.
Yes.
This week, 10.5.
Okay.
But Tom, inventory's going up with much lower production from U.S. crude. So that tells me demand isn't there yet still.
Right.
We still got demand issues.
Right. Yeah, there's no doubt. I mean, it looks like, the bottom line, if we go back to March, we had the downdraft, you had, the COVID everywhere. At one point, not that we're coming out of it, but you guys in Chicago have always had it bad. Us in Florida, Kevin, really have just accelerated the last 2 weeks. I mean, pretty dramatically, too. Like, we didn't get hit so the East Coast, they got hit pretty good at the beginning, right? The West Coast of Florida hadn't. And now, man, we're slammed. It's like sick. I mean, you should say it's the change just walking outside, folks, okay, is dramatic. I mean, I'm not, at least they're taking care of themselves, but it's dramatic. So it's like, okay.
Right.
And
here's the good news. You're right. We're getting pockets of really pop-ups of strong spread of the coronavirus. The good news is the deaths aren't spiking from that. So that's a little bit of good news within the bad news. But, let's face it, guys. We're living with this virus until we get a vaccine.
Well, what's so cool?
Go ahead, Tom.
No, I was talking about this yesterday. Oh my God, Jim Bullard from the St. Louis Fed, right? Sure. I heard a interview with him yesterday, and I thought it was one of the best interviews, meaning in the aspect of us in the marketplace, right? And what he was saying that he wished, they asked him, what do you think that the biggest fears out here? He says, I wish that market participants would really start looking at the aspect of what is their risk assessment without the aspect, okay, that yes, there's going to be a vaccine down the line sometime, but because we're market participants, we're in the probability business. And he said, I wish they'd start really looking at that as to the probability business and the risk assessment, because we're going to be living with that risk assessment for a while. And we all have different risk assessments. And it was so cool, man, because that's when you're dealing with options, that's what we're dealing with, folks, okay? It does, you can, I don't care how you think. The bottom line is that we're dealing with risk assessment and probabilities, right? I mean, unfortunately, this is a health probability, but it affects the markets in a huge way.
Right. And these things are all intertwined and intermingled.
Yes.
Right? I mean, everything we do, every trade we put on Fast Market and midday trade and everything on the TD Ameritrade Network, it's a probability.
Right.
We're always judging the probability of it going in the money, of it staying out of the money, of it touching. I mean, there's probabilities for everything having to do with the markets. And that's what we deal with on a daily basis. And so we're also dealing with it now. I mean, you look across the board, life and these markets are just a series of probabilities.
I know, man. Pretty wild. Hey, so, you heard when I was coming on, this got away from me, man. Yesterday, so Tom, it was what? It was Apple, Microsoft, Netflix, no, not Facebook.
And Facebook.
I mean, 20% of the S&P 500. That just blew my mind. I mean, we know that's out of whack. I mean,
might be Amazon in there as well.
Yeah, Amazon's in there
too. Okay. Because they don't go down either.
That is a very large number. I mean, who would ever? Well, the bottom line, we know that those companies are going to keep printing money. It's not like they're not going to stop printing money. I just don't know. As they're going forward, I mean, will they end up being 30% of the S&P 500?
For your listeners, Tom, that have the Thinkorswim platform up,
yes,
go to the Visualize tab, and it shows you. If you go to the indices and you can open up each indice, and it shows you how big of a percentage each stock plays in the indice. And if you look at the NASDAQ, and you look at Microsoft, Apple, Google, Facebook, and Amazon, it's a huge percentage, and it really gives you the depth of what it does. It's under the Market Watch tab and Visualize.
Perfect. I got it up right now, Kevin. I'm jumping around. It's huge, yeah.
This is so cool, Kevin.
And that really gives you a visual explanation of the percentages of that index covered by those stocks, and really what you're trading. If you're trading the NASDAQ, if you're trading the Dow Jones, if you're trading the S&P.
You should see that this image, Kevin, as Tommy was doing this. This is a mind blower. Oh, my God. Look at that image.
Yeah.
That is pretty cool, man.
I mean,
wow.
And that brings it out. And that's a great way. If you just hit the S&P 500 in general, you really see the depth and the what affects the market, really. It's amazing.
Remember when we were going for $1 trillion company? Microsoft over 1.5, Apple over 1.5. Yeah. It keeps going. Amazing, yeah.
Unreal. Kevin, you have a great one, safe one. We look forward to the program in 45 minutes.
Thanks for having me on, guys.
Thank you.
Thanks, Kevin.
Right there. Tommy and I come right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 422, Nasdaq's up 112, S&Ps are up 45. I want to go over to the silver market first. You know, when you were on this morning, Tommy, right? I heard you doing the silver got slammed, and folks, this is a classic. To me, it's a classic. Okay, meaning that so you have gold at highs, silver has been the most volatile, is the most volatile. It's also what has happened is that the amount of broker dealers that have a handle on silver and can slam silver in about a second is dramatic. And that's exactly what they did. Now, that my take on this morning is that they did it too early this morning. Normally, when they slam it, they can slam gold at the same time. And what happened, it took them a bit to slam the gold market, not that it even got slammed. But I suspect what you're going to see out here, this thing's going to claw all the way back again, because guess what? The volume is way too high. We're already at 158,000 contracts, and this is actually the classics. Because you can make the case in a monster way that this is like a perfect triple top. If you're a bear, there's no doubt about that. So we'll see where that shakes out. I wanted to bring that up in the aspect of where we are, though. In this, because my take, we already, if we go to the gold again, we had a small ABC structure up to 1801, and what did it hit? It hit 1796, so that's not done yet. Then they get the larger one that's up there at 1821. So whisper number, right?
Yeah, let's do it. Crude oil, man. Let's go. You got to peg it again to the 100th of a millionth.
Yeah, right. We won last week. Okay.
Where's your trophy, man? Let's go.
It hasn't come yet.
Call up Bloomberg. Tell him it's late.
Okay, so they get a whisper number of minus 969,000 barrels. Survey number is 500,000 barrels.
You're looking at distillates.
Oh, sorry. Okay.
There you go.
Sure. There we go. Oh, look at this. This is going to be a trip.
Okay.
So
divergence.
They get a whisper number of 804,000 barrels. They get a survey number of a build of 1.5 million.
Yeah, so Whisper is a draw of 800, right?
Yeah.
With surveys a build.
Yeah. Let me see what this is looking like.
And I agree with Kevin just commonsensically in terms of this $40 number in crude, man, with everything else going on in the market, with the market a little dicey. And I mean, just when we were talking to Kevin, right, I just pulled up the CL contract on the Thinkorswim platform, and I said to myself, my goodness, if you put it on a daily, man, and you look at where we were on April 28th, so we're approaching 2 full months, right?
Yeah.
I was counting. I said to myself, okay, there's 2 red days. There's 3 there. That makes 5. There's another 3 that makes 8. There's another one that makes 9. We had 9 down days in over 2 months, man.
Yeah, I know.
That is that's stark. It just jumped out at me when $40 is there. When you have the S&P's down 42 points, you got the tariff news, right, with the EU and the UK talking about billions of dollars in goods potentially going to get tariff taxed.
Yeah, champagne. What are we gonna do? Champagne, man.
LVMH, man. It's they're gonna pay the price. I want my my Hennessy and my Louis Vuitton, but you're gonna have to pay double for it if it can even get here.
Hendrick's gin too. Yeah.
Lots of it, man. So in general, in terms of the potential for a rise, the potential for a drop, risk reward wise, it's tough to see crude with markets near all time highs.
Okay,
Nasdaq
so
almost at all.
This is good. Yeah, see, there's a high volume low right there. 38.51. Okay, so what are we going to do? 38. We're at 39.59. Okay.
All right, you got to peg it again this time. What are you doing? Are you looking for? Well, it's interesting that the Whisper's so far away.
No,
and look at that.
So I'm looking for $1 down.
So you'd be looking for, in general, hopefully more oil than the market might be anticipating.
Yeah, right. Whisper number is minus. Survey number is plus. That seems like a big plus. Interesting.
Yeah.
Survey number. So even if there was so when Kevin was going over that, he went over that with the aspect that there was less that was out there, but yet it wasn't being used. Okay, so I'm going to go with 750. A build of just 750.
Cool.
Okay, there we go.
All right, good stuff.
Let's see where this baby shakes out.
Yeah. One of the things I saw, man, in terms of, I just jumped over, let me pull it up, the Nadex platform. And sometimes, this market, the bid offer is a little wide. This morning, though, I was just even saying to myself, man, so you're trading at 39.60, right? If you're going to make a bearish proposition, let's say you're bearish bias. Sometimes we set up the volatility trade, which you could. Yeah. You could take both sides. But bearish-wise, man, exposure till 230. Okay, your upper end of this spread is $40, so that's where if you're selling it, you're capped out at 40. So your max loss on this contract is going to be $65. You're selling it at 39.37, and the market's at 39.60. So you're selling at 23 cents under the market, right?
Yep.
But with a risk reward where you're capped at losses at 40, you have profit potential to 35, you have a run till 230. I like that trade if you're bearish bias, man. Yes. I do. No, that's not a lot of premium, 20 cents in the price of crude with the movement you might get in a day where the market's going haywire a little bit. It really is.
It was cool here, folks, as Tommy's going over that. That's really saying that the market operators, the market makers, they're thinking that there's going to be a flat, basically, oil market. We got really, right? I mean,
that's not a lot of volatility. No. They have a 10-cent bid offer spread in here, right? So that's a little wide, but that's with the news about to drop in less than 6 minutes, and you got 4 hours of exposure, and realistically, 20-25 cents in premium doesn't seem like that big of a price to pay to have almost like an 8-to-1 risk reward, and you might get $35 today, man. That is not the probability.
Man, we're at a point right now, folks. Okay, that all of these different structures that we're trading can really move. Yeah, there's no two ways about that, man.
So we'll find out. 10:30, always interesting, man. Now, it's really interesting that the analyst number versus the whisper, it's so wide. It's almost like I'm not sure what's going to happen depending on where it comes in on the first move on crude, but we'll find out in 5 minutes, man.
No doubt. Let's go take a look. So inside the Dow Industrials, folks, I believe when I looked at this a little bit earlier, everything was red. Just Procter & Gamble just went slightly green. That's the only one that's putting one positive point in. United Health putting 48 minus, Boeing 33, Goldman 24. What's intriguing is that Boeing is not hit more because what happened this morning, again, that the FAA issued directives on the Boeing, the 737 engine wiring now. So the directive published in the Federal Register's public display page will become final. Let's see. Calling for improved protection of wiring near the engine. I mean, this just doesn't stop, man.
Yeah.
And, it's only down $4.90, which is nothing, folks, for Boeing.
It's amazing we're going on now with so much else happening in the world. It's getting lost. 15 months ago, that plane got grounded, man.
Really?
Yeah, they just in that article, I believe they said March of 2019. If you go back, but that's I believe me. But guess what, man? Time flies. I mean, we've been dealing with COVID getting talked about since January or February. It was first reported in China, right? We're now 5 months out after those numbers, and I believe it was in there. There you go. MaxJet was grounded March 2019 after the second fatal crash linked to a control system.
That's crazy.
15 months. Yeah.
Wow.
And
wild. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow is down 360. Nasdaq's up 87. S&Ps are off 38. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 1.44.
Okay, pretty close to that median analyst estimate, man. Pretty close.
It is. That was 1.5. Yeah, 1.44, man.
And I was just going to say a pretty muted response so far, man. We're trading right now at 39.50, basically, kind of right where we were prior to that number. It might tick around 10, 15 cents as this thing tries to find a bid or an offer. But no real huge reaction, pretty close to in line.
Yeah, interesting, too. Because I mean, they had that nailed, man. No doubt.
Yeah.
Let's go take a look. Go ahead.
I was just going to jump back to this the Visualize tab on the Thinkorswim platform.
Yeah, let's look at this. This is crazy, man.
It's stark, man. When you look at, I hadn't even realized.
Can you put it?
I hadn't realized the market caps. You know, I realized that these companies are running basically the whole entire world, man. Right. But everybody remembers the discourse of $1 trillion market cap, right? Oh, Apple's going to get there. Amazon, Microsoft, they're all racing. We are so far above these numbers right now. Microsoft is above 1.5. Apple is above 1.5.
This is trillions we're talking, folks.
Yeah.
With the T.
Amazon is approaching 1.4. Those alone. And then I think Google is at about $1 trillion, but I'm not sure if these two combine or how. I think that I don't think Google's a $2 trillion company right now, so they can't combine. Do you see what I'm saying? They both listing at about 994. Facebook 675 even, and then you get into the likes of the one stock in the Dow that's positive, PG 291 billion. Even something as when I jumped to the Dow, which was interesting. Now the Dow's price weighted, so this is misleading when you see this in terms of the impact it might have, maybe, I think, because this is talking about market cap heat map, I believe. We'll have to get into it. Nonetheless, man, Boeing is at only $100 billion market cap now, which is just remarkable to think about. That a company like that is just $100 billion, and Apple is 15 times the size of Boeing. Microsoft 15 times the size. Amazon 14 times.
That's crazy, man.
Yeah.
But it's not crazy because the bottom line is that we know everything, bottom line has to do with, man, hey, check this out. This is crazy. I just got even though I was so low, Tommy, right, I earned number 6 place.
Okay. Yeah, you saw a rise of 750 and the Whisper was a decrease of about 900. So there you go.
What a trip. Okay. Sorry. That's crazy, man. Okay.
So anyway, interesting stuff. I was just putting that up there, man. When you look
huge,
at,
man. I mean,
those, it was pretty cool that
I was actually in shock yesterday when he said that those equities were 21% of the S&P 500. Like, really?
I mean, even you look at a company like Walmart, right? Walmart, only $341 billion company. Microsoft is 1.5 trillion, Apple's 1.5 trillion, Amazon's 1.3, Google's $1 trillion, Facebook 675 billion, and Walmart, the country's biggest employer, only 340 billion. These tech stocks, man, watch out.
What it says, folks, get your kids into tech stocks. That's it.
Oof.
That's it.
Get them into programming, man. You don't have to. You don't have to be a programmer, but you got to understand technology, man.
It's where the whole thing's going, and you can see it so dramatically. There's no doubt. There's no doubt.
Hey, and just jumping back before we get away, man, oil falling out of bed a little bit, down to 39.08. So we dropped about 50 cents on that news.
Okay, so that's that. That has. Let me just look at it. Now this will be a stale quote. This is 20 minutes late, but it has that high volume low that's laying down there, man. From 2 days ago, I think. Let's see this. Yeah, here it is out here. That's actually from Friday. 38.51. 38.51. Okay. Now let's go to the high volume low. Well, it's not a high volume low, but it's where Peter and all his friends are hanging out from 2 nights ago.
Yes, the Peter Navarro low.
Yeah, totally, man.
Hey, we're coming up on that Peter Navarro low, man.
That's my point. It's going after it, man.
We're right there.
It's going after it. And in fact, it's what you have here, folks, is a large ABC down. It's a confirmed ABC down to 3,005.5, and I think that the low is 3,060. Oh, no. Oh, here it is right here.
Yeah, 3,060. That's the low that night.
Yep. And so the ABC down, see, we broke the B point of an ABC down earlier. And that price projection is 3,005.5. So 3,060 can be game. You whack that out, and then you're going to be right down into this 3,030, which that is going to be a number in itself. So.
And things happen quick, man. The S&P is flirting with 3,200. These cases surging. You don't have to wait long, unfortunately, to see the possible repercussions, man, of these cases surging. Exponential growth, folks. So beware out there that, you come into a weekend. It's only Wednesday. Monday, man, 5-10 days. I mean, you sent me the article right about Houston, talking about ICU beds potentially projecting 11 days out to be full.
Well, here, check that out. That headline, I dug into that last night. This gets more dramatic. That headline, they only have, they got in ICU right now, they either got 1,100 or 1,300 people in it. They only got 345 beds left. It's like, what? 345 beds is nothing, man. So I suspect the governor's calling in beds. I'm sure he is, because he's getting nervous, man. So, bottom line is that we're going to be living with this for a while, for sure.
Yeah, I agree, man. And,
the S&P in general, it showed us that it was really nervous. There's no two ways about that. We'll see just how this baby goes.
So let me get just some of those numbers before we jump away. I just was able to grab it from Bloomberg. So this is talking about a number of this article in particular, talking about a number of the different spots, Florida included, of course. But Texas recording 5,000 new cases. Now, this article, I believe yesterday, either way, within the last day. But the numbers they were talking about in terms of the state health department reported 5,489 new cases. And then they get into hospitalizations, meanwhile, surged more than 10% to over 4,000. The 381 new admissions, biggest daily increase. That's hospitalizations, folks. That's what people always say. It's not about cases. It's not. It's about hospitalizations. It's about ICU beds. It's about that type of death and effect. So you have the biggest day in surge in hospitalizations going on in the state of Texas. Harris County, home to Houston, third most populous county in the whole state of Texas. Intensive case capacity exhausted in 11 days potentially, based on the 2-week average. Surge beds will be full in 38 days as you get into that. And this is where you talk about there are 1,488 COVID-19 patients in ICU beds across the county, leaving only 134 intensive case beds available and another 326 surge beds. So that's a different classification. Stark numbers there. And like we said, that's an 11-day projection that could run out of ICU beds, folks. That's the end of next week.
Let me tell you something. By the end of today, I want to see those numbers again. When you're talking about 100 beds left, it's like, okay, I'm sure that by the end of today, we're going to hear that there's plenty of beds. Well, they can make them pretty quick. We know that. So the bottom line is that's what they're going to have to do, which is, And the market's paying attention to it right now. I can tell you flat out. I went out last night. I didn't go out. I was walking Harley, my dog, in St. Pete last night, right? Everything has changed, folks.
Yeah, I heard you talking about with Kevin, right? Yeah.
I mean, it's changed dramatically. There's.
What's interesting, man? I talked about it yesterday. I'm in Polk County near Lakeland and Bartow, and I went to Publix yesterday, and just myself, I said, listen, I'm going to try and be completely observant, and the number of people not wearing a mask, man, it's at least 50% or more. So this is not going away, and it's going to matter when it comes to earnings, revenue, growth, all that stuff, man.
The cool thing is everyone's wearing masks here.
It's mandated, isn't it?
Well, it's mandated as of 5 o'clock tonight. Oh, well, actually, St. Petersburg was mandated yesterday, or the day before. Yeah. Stay right there. Tom and I come right back, folks.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 497, Nasdaq's up 139, S&Ps are up 53. Let's go over to our man, Mr. Teddy Kagestad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Kagestad, what's going on, brother?
Well, we got a little mixed bag of goods going on with the currencies today, especially now that we have new tariff agreements that have to be made between the U.S. and the EU and the UK.
What are they going to do with our champagne and our gin, man? What is he doing?
Yeah.
Holy cow. I'm telling you.
I know, and even us exporting whiskey too, right?
Yeah. My God.
I know. Why do they have to mess with the necessities of life?
That's a no-win situation, man. We'll find out where it shakes out. But bottom line, folks, we'll see where that shakes. It's wild. The whole thing's wild. So the dollar saved itself again. You know, that dollar. You know what's so interesting, Teddy, is that the first leg down, March, we hit the low. June 10th. It hit the highs of the lows, rejected it. Yesterday, we hit the highs of the lows of June 10th and rejected it. So where do we stand now?
Well, you know what I think we have going on is, remember a couple weeks ago we were talking about the U.S. dollar getting a slight correction, which is what it did so far.
Yes.
Now I think that what we've seen over the past couple days, we had a little sell-off in the dollar, but today we see a little bounce going on, and it's happening in the majors. There hasn't been much action going on in some of your lesser currency crosses,
okay.
But I think that you're going to see some action now over the next couple days where we're going to start to see some divergence, and I think it really has to do with the U.S. stock market being kind of on shaky grounds. And remember we were talking about the metals markets over the past couple of weeks,
yes.
And how now gold is obviously seen a nice little rally over the past couple of days, while silver still has been kind of lagging.
Oh, yeah, they slammed silver this morning. It's making its way back right now, but they slammed it. Yeah, no doubt.
Right. Well, so this is what tells me is that since we have a little bit of divergence going on with your metals, and then also we have the interest rates that have been kind of like narrowing once again, then now we're looking at an equity-based trade. And I think that the stock market is kind of on shaky terms. I mean, obviously your tech stocks like Apple and Tesla and Amazon, they're going to keep on rallying no matter what happens, So, but the broad-based S&Ps, though, I don't like the fact that the dollar and how certain currencies have gotten their trends over the past couple months. The stock market had a nice little rally, but we failed to make new highs. And the way, I was in the S&Ps for a long time, and it's natural for me to want to always sell that market. However, right now, I think we are setting up for a nice little correction. And the only reason I say that is because, especially as we start to see a second wave of coronavirus in the United States, now globally it doesn't seem to be such a big deal. But if in the United States, if there are certain sectors that, especially a good portion of the country, that starts to fall into a lockdown situation, this is going to have another big impact on the stock market for sure.
No, I can. I thought yesterday, it was very surprising, and the day before that, we had the Nasdaq hitting all-time highs, and the S&P couldn't catch a bid. We're up $20, folks, but the S&P $20 now is not a big deal. It's like that's like being up 2 points. If we were talking 6 months ago. I could see it. It was like, okay, that's a big number.
I think that's going to cause a dollar bid to happen. So because if you think about this, oil is kind of tapped out. I heard you guys listen. You guys have the oil report always before I come on. So oil, we know that demand is obviously going up. There's more cars on the road now in Chicagoland than we've seen. And I went out for the first time to a restaurant last week, and I took an expressway that for the past 4 months you could get on at 2:30 in the afternoon and there's no cars. Wow. For the first time there was actually traffic. So I was amazed at that. But I still think that demand isn't going to be that exciting for the next couple months. And as long as that stays stable, and especially with interest rates where they're at, you got to figure, where's money going to go? Well, I think if money is going to be money, then money is actually what's going to be moving, So, and I think the U.S. dollar is going to get another leg up just because of the way, if it was really negative, if this was just a downside correction, a corrective move higher that dollars had over the past couple weeks, we should start to see much more hitting of support. We should see the majors actually starting to look very strong. And the euro is not looking too strong versus the dollar. The pound is looking very, it's weak versus a lot of currencies, and especially with these trade agreements. I mean, honestly, I can say that I don't think you're going to see an agreement between the EU and the U.S. probably for at least 3 to 4 months. Probably not at least until right before the election.
All political rhetoric, right? I mean, that's we're going to be hammering everyone before the election. I mean, that's
sure. Except for the UK, that's going
to be the normal mantra, right? I mean, there's no doubt.
Well, I think that the UK actually might be the one in difference on that one, So I think that if we can get a deal with them, that I think has a more likelihood to happen before the EU, just because of the fact that it's going to be an easier negotiation, and also politically right now, we don't have the, I guess you would say, the friction so much with the UK as we do with the EU.
Right. That's right. Yeah. It's almost like a new country now that it's out of the right. I mean, there's going to be new alliances. Well, there has to be new, basically, agreements, right? There's no doubt about that. So,
sure, and you got to remember that the UK is an oil-producing country. The EU is not an oil-producing union.
Wow, that's true. Yeah, right. They get the North Sea. So interesting. Yeah, right. Okay.
So, but I think that we're going to start to see more of a dollar surge over the next week and a half, and it's more. I think it's a flight to quality thing because interest rates aren't moving. We know you're not going to get any action from the interest rates. So, and the stock market is too confusing now, like you guys were talking about, and I said before, the NASDAQ could keep on rallying for the next 2-3 years while the other two markets could be sideways to lower, and I think that's starting to become a big confusion for a lot of investment players out there.
Well, when Tommy, I don't know if you heard me, when he's going over these market caps of the tech stocks versus the Boeings and the Walmarts and the things that Procter & Gamble's, that was amazing, man. I mean, they're tiny companies now compared to when we're talking the tech stocks, right?
But what does that remind you of, Tommy? This happened before.
Yeah.
2000. Remember in the 90s? Yeah, exactly.
I know.
Right. I mean, how long can a fantasy company run on a huge market cap? Eventually, you have to make a product. You have to show profits. You can't just have an inflated stock value.
Right. Right.
Don't let Jeff Bezos hear you talking about his company like that, Teddy.
But you know what, Tommy, I wish I could have run my company for 10, 15 years at a loss and grow it to such a huge size. I mean, I don't know how you could pull something off like that. So, I can't compare myself to Jeff Bezos. I never would.
No, I joke, man. It's staggering, man. It is. I mean, and the multiples are still huge on some of those companies. So that's where, $1.5 trillion, and one of the strongest ones I brought up, up, Teddy, was Walmart's at $300 billion. And it's like, really? Sure. Microsoft, $1.5 trillion. Apple, $1.5 trillion. Amazon, $1.3 trillion. And Walmart, the biggest employer in the nation, $300 billion with stores everywhere.
I know.
Exactly. Yeah, it doesn't make any sense whatsoever. And I think that that's a bubble that, I mean, what would happen if you had fair value actually have to come into those stocks? What happens if Amazon all of a sudden falls under an antitrust suit?
Yeah.
So, I mean.
How about you just to throw Target? I just found it. I couldn't even find it. $60 billion. Target. They're a huge company, man. Yeah.
Right.
Teddy, you have a great one, safe one. Look forward to speaking to next Wednesday.
Thanks, guys. Ride the dollar bull for the next week.
Oh, boy.
All right. Thanks, Teddy.
Giddy up.
Take care.
Take care, man. Stay right there, folks. Tommy and I come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 530. You get the Nasdaq off 142. S&Ps are off 55, and it's making its way down to its friends there. Well, actually, it probably just made it to the friends. My take is we'll go into that 3,055 with that ABC structure down. Oh, look at this. We just hit it. Isn't it crazy how this works, folks? So we just hit 3,060.50 on the dot.
Yes.
and it's 3,060. But guess what? This ABC structure down, folks, is a 3,055. So,
hey, and crude, just to finish up, dropping out of bed, man, dropping out of bed quick. We're down $1.20 since that trade. And you know, you're not always right, man, but you're only paying 20 cents in premium, folks, and you just moved $1.20 in 25 minutes since that number, and you would still have 3.5 hours of exposure. Now you're dealing with $1.50 of risk, right, all the way up to 40 if you were in that trade. But that was a heck of an opportunity there with crude coming out and only 20 cents of premium.
They mispriced it. I like it.
Yeah.
That's a big number, man. 230 is like 5 weeks from now, man.
Yeah, exactly, right? Look at these bars, man. They're dropping quick. And, hey, I just wanted to finish up on these market cap deals because it's got my mind going now, right, in terms of the companies. So just during the break, right, I added up the market cap of the companies: Home Depot, Lowe's, McDonald's, Starbucks, Nike, Walmart, Costco, Target, and Procter & Gamble. You're at just over $1.5 trillion.
Wow.
Yeah, so you're dealing with, you know, yeah. I know. And none of them, the biggest one there, Walmart at 341, Home Depot at about 265 billion, Lowe's at 100, McDonald's at 136, Nike at 154, Procter & Gamble 290, Costco 131. You can have all those companies, or you can have Microsoft or Apple. The play might be Microsoft or Apple. It really might. I don't know, but that's the comparison going.
I'd take the other side of that.
Yeah, I hear you.
I'd take the other side of it.
I hear you.
Listen, I got it. Listen, folks,
Walmart.
stay right there. We can think of some coming up next. I'm Matt Basil Chapman, Steve Rhodes, Dave White. Thanks, pal.
Thanks, man. Love you.
Love you. Wow, look at them, folks.